Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to put it all in context. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Every time I think that we are overstating the impact of artificial intelligence, something comes along that tells me we aren't making enough of it on the show. Now, I know that there are plenty of other industries we got to focus on, which is why I always tell you Dow declined 245 points today, S&P dipped 0.56%, NASDAQ declined 0.51%. They all went down at the end because of some stuff President Trump did about semiconductor casing. But if you want to know what's going to happen in the future, not the near future like next week or tomorrow, but next year and beyond, then I think you must factor in artificial intelligence. When it comes to employment, both public and private, it might be the most important force out there. Fortunately, tonight, we happen to have the godfather of AI, Jensen Huang, CEO of Nvidia, coming off an excellent quarter announced this very evening to talk about both the near-term performance and, much more important, the long-term implications of what Nvidia is doing for our nation and our world. And we will include China, which the president is very worried about. Now, I'm not a doomsayer like the CEO of Anthropic, Dario Amodei, but he's a brilliant artificial intelligence entrepreneur who, according to a recent interview with Axios, believes that AI could wipe out half the entry-level white-collar employees in America, half, and spike unemployment to 10 to 20% in the next 1 to 5 years. He's talking about a possible elimination of jobs across technology, finance, law, and consulting. The man behind Claude, yes, Amodei is the godfather of Claude, wants to sound the alarm before 20% of the people in this country don't have jobs. Now, we need to know what percentage of people will be replaced by agentics, yet robot agents mastered by Salesforce. And, of course, we'll speak to Mark Benioff this evening. We have to know whether Nvidia will change every aspect of our lives once we get mass adoption of their ultra-powerful chips. Will they let us all drive hands-free everywhere? Will they allow us to have robots at home and at work doing the jobs that would have previously been done by humans? Or not, asked by Anthropic CEO, but could they make up for this shortfall in population that could be coming when you look at America's ever-declining birth rate, which I think is more incredibly important, not talked about? And yes, when will they be smarter than us and more useful than us and even perhaps obviate us? We always hear not to worry. We're creative. There's room for humans. But where is that room once AI gets good enough? If the CEO of Anthropic is right about where this is going, just think of what the world will look like 5, 10 years from now. The Fed won't be discussing how tight employment is. Instead, the beige book will be filled with data about how whole job classes have been obliterated. I've seen the robots that can make the hospital beds, clean the hospital room, fix up the hotel room better than any human. Certainly much cheaper. I know of the FedEx warehouse where the boxes are unloaded and stacked by robots, not by people. I've seen a box fall on the head of a robot. They have to have our form factor because the world's designed for our form factor. The robot was unfazed. A human's neck, definitely broken. Anthropic's Amodei focuses on white-collar jobs, and we'll know soon enough whether the law and business school graduates can't get a job, right? How can companies afford to hire them when they might have to fire them a year from now? I, on the other hand, am fixated on how robots could take over the jobs that no one wants, or the jobs that people only do for lots of money because they're so dull, they're so dirty, they're so dangerous. Why is it so hard to get our arms around what AI can really accomplish? First, I think that no one in the industry, nobody really wants to talk about how many jobs would be wiped out. That's not exactly good PR, is it? And when we speak to Mark Benioff later, the CEO of Salesforce, which reported tonight after the close and delivered some very strong numbers, excellent guidance, he's adamant that his agent force, which uses computer-derived agents or agentics, will put people who are in relatively unproductive positions into much more important revenue-producing positions. From the looks of his quarter, I got to tell you, I think he's onto something. But when you're a CEO, as I've been, you know what? You're really conscious that workers are expensive. CEOs don't want to bring in agentics to make their people more productive. They want to bring in agentics so they can fire people and rack up cost savings. Nobody's going to make that pitch to the general public because it is so unpalatable. It's more like what Amodei says, quote, cancer is cured. The economy grows at 10% a year. The budget is balanced. And 20% of the people don't have jobs, end quote. That's a lot of positive, very much balanced out by one huge negative. Now, obviously, nobody really knows what's going to happen, but we can talk to the people who matter, including Benioff and Jensen Huang, the CEO of Nvidia, see what they have to say. Unfortunately, in this business, we're desperate to find out what's going to happen 90 days from now, let alone 5 to 10 years from now, which most people are not interested in. Fortunately, this is mad money, and we got a longer time frame. The time frame that includes the possibility of longer-term profit, though. the bottom line, let's see if the agents can do our jobs better than we can. Let's see if we'll even play a role in our own world, or whether human workers will become obsolete and we'll all just watch TV all day. Maybe Mad Money? I just hope it's still the real Jim Cramer rather than my AI replacement. Deepa in California. Deepa.
Thank you for taking my call. I would like to ask a question about one of my favorite dividend stock, that is Chevron, CVX. Since it has fallen quite a bit from its 52-week high, is it a good time to buy back?
Okay, I think that you have to have a view on oil when you think about this one, Deepa. And I think that first, I think oil's going lower. I think it goes to the 50s. I think it's part of the president's plan to be able to reduce the inflation rate. However, it does yield 5%. I don't want to reach for yield. I never want to just say, you know what, I'll take the 5% and not worry about the common stock. You are going to wait till this stock at 136 goes to 130 before you pull the trigger, and not until then. Mike in California. Mike.
Hey, Jim, love the show.
Thanks, Mike.
Helping us become better investors. I
That's the goal.
wanted to get your opinion on which is the better investment right now, Costco or Walmart?
Okay, Costco is about to report tomorrow, and I think that no matter how good the quarter is, the stock will sell off because that's been the pattern now for, I'd say, the majority of quarters. That's just the way it is. So therefore, I'm going to tell you, take that gun away from my head when it comes to Costco. I like Walmart very, very much. Buy Costco after it declines if it does go down, because Costco is actually on fire. It's just that they tell you how each month's going to be already. No surprises there. And people just say, I'm bored. Buy the boredom. Ian in Florida. Ian.
Booyah, Jim. How you doing?
Ian, I'm having a good day. How about you?
I'm doing great. Thank you, Jim.
Thank you. What
Jim,
else?
Investing Club member, third-time caller.
Thank you. Woo.
Yeah.
All right.
Love what you do for us. Thank you very much for everything.
Thank you.
Jim, I got a question. It's about a communication stock. It's been it had really good earnings, and it went up quite a bit, but lately it's been really sinking, and it's kind of attached a little bit to Google in some ways for advertising. What do you think about Reddit, and is it a buy here?
Okay, I want you to buy Reddit here. Let me tell you something. This stock has been coming down. It was a short squeeze. It went all the way up to 200. That shouldn't have happened. I think Steve Huffman is doing a remarkable job, and you are on to something. Reddit, I think, is probably the best bang, really, the best bang for the buck that there is right now in advertising, and people don't realize that. I've done so much more work on this. I can't even tell you how much work I've done on this, and I keep coming back, and it says, you know what? Insta is second, all right? TikTok second, kind of even. First is going to be Reddit. Bang for the buck. You're onto something, because the verticals are so precise. They're so precise. So anyway, that's my lot. I used to say TikTok first. I used to say Insta first. No, they're backseat to Reddit. You heard it from me. All right, tonight I'm finding out what's really going to happen with these agentic robots. Maybe they'll be our coworkers. Maybe they'll replace us. Maybe we'll just all watch Mad Money reruns for the rest of our lives. Could do worse. My late father would have loved that. On Mad Money tonight, we have a really big show ahead with two of the most important executives in this market. Salesforce turned in results. I like that quarter. We got to talk to Mr. Benioff. Got some big customer wins, and I think Informatic acquisitions got to suss that out. Then Nvidia reported a top and bottom line beat despite China. We have the most anticipated interview in the history of the Western world with Jensen Huang tonight. Plus, we're always on the hunt for opportunities, so I'm seeing if we shouldn't be able to maybe buy Lululemon. Oh, I'm sorry, that gave it away, didn't it? So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
What do you make of these numbers from Salesforce, the cloud software titan that's betting big on AI with agentics? After the close, the company reported a strong top and bottom line beat. Management also raising their full-year forecast. But there's always a lot going on under the hood on this one. Let's check in with Mark Benioff. He's the co-founder, chairman, and CEO of Salesforce. Mr. Benioff, welcome back to Mad Money. Mark, welcome back to the show. You've done a remarkable quarter here with just a tremendous raise in the fabulous guidance. So tell me, what were the drivers that made it so that you could take numbers up so big?
Well, Jim, it just was an incredible quarter, and you're right. We are raising guidance by $400 million. That means we're going to do over $41 billion this year in revenue, Jim. Pretty awesome for Salesforce. We're so proud of our team here. And I'll tell you, a lot of it has to do with the customer success that we're seeing. And we've got some great stories about the quarter.
It does seem like a lot of people have been saying, all right, well, when is Agentic's going to really be in the numbers? When is it going to matter? To me, this quarter looks like an Agentic's quarter, and that the other things that you have, let's call it old Salesforce just for a second, all augment each other. It's not like different silos. Am I right?
Oh, Jim, you really understand what's going on with Salesforce. We have so many exciting things happening, especially with Agentforce. As you know, every company can now transform themselves with AI. I mean, this is really what AI was meant to be. And you look at a huge deal in the quarter was with Pepsi. Now, Jim, you know Pepsi very well, and their CEO, Ramon, he's incredible. He's a good friend of mine. And now they're using 11 of our clouds, and now led by Agentforce and our data cloud, to really transform transform Pepsi. And that means that they can really bring together their snack business, their beverage business, all as one customer information system. And that idea that it's all then interfaced directly with our agents and Agentforce, that's just an awesome vision and dream.
Who is talking to? Look, I know Ramon well. I'm trying to figure out at what point, what stage does the customer get involved? It's obviously not the retail customer. Is it the retailers worldwide? Because PepsiCo is a worldwide retailer.
Jim, this is everywhere, everything from order placement to inventory checks to even consumers being able to kind of learn and interact with the product.
So you're talking about the Frito-Lay division, the Frito-Lay division, which sends a truck every minute to another store. You're in on that.
Yeah. Jim, this is Pepsi, this is Lay's, this is Doritos. This is going to be every part of the company. This is going to be about creating one Pepsi. And that's one thing I'm really excited about what's going on.
All right, now let's talk about what would happen if you happen to have Informatica layered on. I like metadata because I like indices. I like to be able to look at data and make decisions. What would Informatica do right now for Ramon LaGuarta at PepsiCo?
Well, Jim, as we said, this is all about AI. It's about Agentforce. It's about our data cloud. But if our customers don't have their data together, it makes it a little bit more of a challenge for them. So you have to have the data. It's not like consumer AI. Consumer AI, you've already got all the data put together. For enterprise AI, they have to put their own data together. And that means they have to understand their data lineage. They have to have a master data management. They have to be able to have all the connectivity and the homogenization of their data. And ultimately, their data has to be in a harmony. And that's what Informatica does with Salesforce. That's why we're so excited to announce just yesterday the acquisition of Salesforce, buying Informatica for $8 billion. This is really exciting.
All right, so last year there was a dalliance, didn't happen. What made it happen this year, and why do you need it, given the fact that you have a lot of smart guys, you said it yourself, whom I thought could have developed a very similar metadata approach without Informatica?
We're very disciplined, Jim, in our acquisition strategy. As you know, it had to be accretive. It has to be non-dilutive. It has to make sense for our customers. It has to make sense for our investors. And everything really lined up this year. We love the company. I mean, I've been working with the company, Jim, since 2006.
I know you. Maybe sit down with them. They're smart guys.
I've always loved.
They're smart guys. They knew about this. They understand banking, and you need some more banking. Do you think that they will be able to get you to be in the door to do the other side? Right now you do a lot of banks, I know. But regulation has kept it from being able to be the agentic situation. Same thing with healthcare. I see the possibility that you're going to be able to do agentics for banks and healthcare. Those are the two largest verticals, and that you'll have them.
Well, Jim, we're doing that. We've talked about what we're doing with RBC and so many other banks as well. Some of them don't want us to talk about that quite yet.
Yeah, I know.
But we're talking now. Jim, you have to realize Agentforce is now over a $100 million ARR product just 6 months after we introduced it. Our data cloud and our Agentforce product together is more than $1 billion now in ARR. These are our fastest growing products that we've ever seen in the history.
Well, don't you think that some of the upside surprise actually came from these? Because when I look at the other verticals, they're all good. But you had there's a big number in this.
Jim, more than 8,000 Agentforce customers. The 4,000 of those are already basically paying and fully involved. And some of those stories, Jim, we've been talking about, but they're still unfolding. So we look at Booking and what's happened with Glenn and how he's really rolled out Agentforce in this really smart way. First with the restaurants, then with the employees. Now he's talking directly to his consumers with the agentic platform. Plus he has all of our clouds, right behind all of that. So whether he's doing sales or service or marketing, field service, even commerce, all of these things can basically be tied together and then delivered through this agentic platform.
Tell me how much more thorough and how much more accurate an agentic Salesforce is than I hate to say it because people are human, right? But how much better this is than humans?
Jim, I'll do that through a story. And Jim, I don't know. We've never talked about Flabella before, but
that's the largest department store in South America.
Okay, well, you already know, so I can't surprise you.
No,
but anyway, this is like the Nordstroms of Latin America. And we started with Agentforce with them in their Colombia operations. And they want to do it in a completely new way, all through WhatsApp. So we're like, yeah, we're going to do that. It's going to be great. We're willing to do whatever you need. And their major use case, Jim, is this. Where is my order? So here you are, you're talking to the agent. You want to be able to get your order. It was such a success, Jim. They immediately completed the trial and said, we're going throughout all of Latin America. So now all of Falabella is on Agentforce, on Data Cloud, on our Sales Cloud, our Service Cloud, our Marketing Cloud.
Is it time to take a trip should we go to Bentonville? Is it time to go to Bentonville? Talk to Walmart?
Jim, Walmart is a huge customer.
I know, but I want them to do this. This is the biggest use case for Walmart in the world. It'd be amazing. Just like if you were an appliance
I hope I'm going to be
company.
seeing Doug actually tomorrow. But he's done a great job.
Yeah.
I mean, and by the way, not just that, they use it in their software. Did you know that Walmart also makes enterprise software for retailers? And we have a great partnership with Walmart where they've taken our products and actually they deliver them to their customers in packaged enterprise software. It's an incredible, all the things.
Let me ask you, there are people who are saying, look, the big gain here was currency. When I back out, it did go from a headwind to tailwind, but it still doesn't account for the entire bump in guidance that you get.
Jim, you're right. Currency was working in our favor. Bookings are working in our favor. Revenue is working in our favor. Everything is working in our favor. And sometimes when everything is going well for you, it's all good. And you know that sometimes everything is not going well. But right now, we are just going to have a great year. And Jim, how many software companies are delivering for you this year? $41.3 billion in revenue
but
guidance.
I know that one ServiceNow says to me, look, we can come into that vertical of your friends, Benioff. ServiceNow has decided that they can be in your vertical, correct? You've seen them.
Jim, one of the most exciting things about Salesforce is our size and scale, and I think you know that we're about 5 times larger than them.
Fair enough. Okay, how about consumer sentiment? How are you feeling right now about both our country and also, a lot of people feel that you detect sometimes that there's a sense that maybe the nation is not as united and strong as you'd like it to be. Where are we as a country, as you see? Because you have a better barometer than everybody.
Jim, I really think the economy is going incredibly well. I see, things worldwide actually doing really well. Everywhere I go, I was in Japan last week, there's tariff anxiety. It doesn't matter what CEO you're talking to in what country. They just want to know what the rules are and how to play. And I think tariff anxiety comes from there's been so much change in the last few months that it doesn't matter where you are in the world, that these CEOs all have a little bit of tariff anxiety, and so they're just slightly adjusting. But let me give you an example of where that has not been as true, which is, and you know that Salesforce does business in sales, in the small business marketplace, in this medium, in commercial, in the mid-market, in the high enterprise. In these lower-end markets, in the small business market and the mid-market, those are double-digit growth markets for us in the quarter.
Yes.
So we saw really strong performance in the mid-market, and those are not as impacted by this. It's these
That's a very good point.
CEOs of these very large companies, who are very hypersensitive to what is going on in the political situation. That is what's happening. That's not just true in our country. That is true in every country.
But I will say this.
In the small, medium, and mid-market.
I will say that of the when big companies make a choice when it comes to enterprise software, they're not holding back when it comes to buying your product. And they are in many others. So I'm going to congratulate you on an excellent quarter. Mark Benioff, founder,
Jim, thanks
chair.
so much. It's great to see you again. Hope to see you soon, Jim.
Absolutely. Thank you, Mark. Good to talk to you. Mad Money's back in for the break.
Coming up, the quarter all of Wall Street has its eye on. Nvidia CEO Jensen Huang joins Cramer to discuss the earnings that move the tape like no other. Next.
Tonight, we got the single most important quarter of this entire earnings season when Nvidia reported. There's a lot of hand-wringing about this one as usual, but Nvidia delivered a huge set of numbers, including a sizable top and bottom line beat, healthy revenue guidance for the current quarter, even after taking an $8 billion sales hit on those export controls that prevent him from doing lots of business in China. So how'd they pull it off? Let's go straight to the source with the man I call the modern-day Leonardo da Vinci, Jensen Huang, the co-founder, president, CEO of Nvidia. Well, Jensen, welcome back to Mad Money.
Hey, Jim, it's great to be here.
All right, so let's go to, it's a remarkable quarter in every single way, but you do say, I'm going to go right there, that China is positioned to lead globally, and you do not think that unless you can sell to China, you can necessarily lead with them. And I look at this market and I'm saying there's $50 billion up for grab. I actually think it could literally be all yours if there weren't export controls. Am I wrong? And how much of that money would flow back to the United States if you could do the sales?
NVIDIA's market share in China was about 95% 4 years ago. It's about 50% today because of the limitations on the products that we sell. $50 billion a year market today. It's growing just like AI is growing everywhere. Over the course of this 4 years, the president's administration, we're probably talking about a few $100 billion worth of revenues to NVIDIA, probably tens of billions of dollars of taxes, revenues to the country, thousands of jobs, incredible opportunity. But more strategically, more importantly, this is very important. First of all, the China market is, of course, very large, but it's also the home of 50% of the world's AI researchers. The platform that succeeds is the platform with the most developers. Just like iPhone's successful because of lots of developers, Windows successful because of lots of developers. All these platforms succeed because there are a lot of developers. China is home to 50% of the AI researchers in the world. And so we want the world to build on American technology stack. We want every developer in the world to prefer the American technology stacks. Once that happens, the developers develop on American technology stacks. American technology stacks will run AI the best all over the world. And so that's probably the most important strategic reason to be in China, because there are so many developers there and because the world is going to adopt technology from one country or another, and we prefer it to be the American technology stack.
Well, you know the president has a plan. You say that. He has a vision, and you trust him. You say that. I have to believe that you think that he has to either see the light or he has, and that things that look so dire right now in China may not be as dire, and there could be even as soon as next quarter more business being done than we thought after tonight.
It's hard to tell, but the most important thing is this, Jim. Our president wants America to win. And he also recognizes that this is an important market. It's a very large market. And the revenues that it could generate for the United States is significant. It's just incredible. $50 billion this year. Look, we're talking about the size of a Boeing, not a Boeing plane, Boeing the company. This is an enormous market. And so I think the opportunity left behind is quite substantial. This is also an excellent way to improve our trade deficit.
It would also seem to me that there must be some people who think that they can militarize your chips. I can't imagine a scenario where they would decide, you know what, we're going to use NVIDIA chips in our aircraft carriers. We're going to put them in our submarines. Wouldn't that be foolhardy? We would never use Huawei chips in our missiles.
That's exactly right. They have plenty of chips themselves. Obviously, we're losing market share to chips that are built locally. China is an extraordinary manufacturing capability. and they are doubling the number of chips that they're building every single year. The technology that's being offered by Huawei is extraordinary. This is an extraordinary technology company. And so we have plenty of competition there. Chinese government has plenty of choices with indigenous technology, which is their preference. And so I think that the idea that, anyhow, go ahead.
But isn't it true that the president has helped you immeasurably? The huge business that you're doing in the Gulf states. When you see him, he obviously is in many ways NVIDIA's #1 salesperson. Is it asking too much to be able to say, and not only that, Mr. President, I also want you to open China?
Well, we're going to keep our dialogue going with the administration, and I believe that what we're explaining is ground truth, and we understand the technology best, and we understand how computing works, we understand how AI works, and we've been in China for 30 years, and so this is an area that we have a lot of expertise, and we're going to continue to share that. But let me tell you this, Jim. Listen, the president laid out a bold vision for United States, for America to reindustrialize the onshore manufacturing so that we can have a more resilient supply chain, so that we can create jobs locally, very importantly, so that we become great at manufacturing again. At a time when manufacturing isn't about labor, but it's about labor only, but it's about technology. And so that vision is incredible. This initiative by the president is likely going to set the United States up for a century, for this century to come. This is going to be a very big deal. I also think that when he rescinded the AI diffusion rule, it was a visionary move, it was a bold move, and he recognizes that there's an AI race and we're not alone. And he wants America to win. And so it's not about AI diffusion limitation, it's about AI diffusion maximizing American technology.
Okay, so
and so he sees that.
Okay, so let's talk about the Blackwell ramp, which was amazing, and of course we're going to have Ultra, which is incredible, and the demand. Is the demand, as when I saw you the last few times, it sounds like you're running out of superlatives, but demand seems even stronger than GTC, and even stronger than Computex.
The demand keeps growing because there's just more companies. Well, number one, inference has taken off. That is number one. Inference has taken off. This reasoning AI capability is genuinely a breakthrough. It is now so popular, solving so many problems. And the amount of computation necessary for reasoning, for thinking, is 100 times, 1,000 times more than a couple of years ago when ChatGPT was a one-shot answer AI. And so now these reasoning AIs requires a lot of thinking, a lot of compute. The demand is just incredible.
Now, you're telling me even since
of course,
GTC,
we're getting more customers.
But even since GTC, you just increased it. It was 100 times what GTC. Now it's possibly even 1,000. Yeah. How is this possible, Jensen? And why are there still people who are holding back and not seeing what you're doing? We will all have robots. We will all have we'll have hands-free driving. All of this is going to come about much faster than people realize because of what you're working on.
It's completely true. Robotics is definitely within the next 3 to 4 or 5 years. The technology works today. It's starting to work very well today. Now, once a technology becomes realized, becomes possible, it's only a couple of 2-3 ticks for an engineer to crank it and turn it into something that could be really scaled out in volume. And so self-driving cars are here, that we know. Robotics is going to be right around the corner. Robotic factories being built around the world. Yeah, this is the next great growth opportunity.
All right, so let's talk software. I don't think enough is talked about software. I don't think we're not talking about Omniverse enough, and we're not talking about the idea that you're just not selling these devices. You're selling a full platform that's not duplicable, which is why you're so far ahead of everybody else. It's not just about the hardware.
We used to be a chip company, and then we became a systems company. And Jim, you know now, we're an entire infrastructure company. If you take a look at what we build, it's an entire factory. And you can't just load up a factory with chips. You've got computing systems, you got networking systems and switches. But what you have mostly is a mountain of software to get it all to run. When you've got a $50 billion infrastructure, the software necessary to keep it humming and to make it make the utilization and the efficiency and its throughput as high as possible, that piece of software is invaluable. If the utilization was 10% off, that's worth $5 billion. And so this is a very big deal now. Software is just a giant part of our business.
Okay, how about what we have to talk about society and when I hear what you can do, when I hear what the robots can do, when I know what Boston Dynamics, 1X, when I see what these companies can do, I wonder, is the CEO of Anthropic going to be right when he talks about a bloodbath of white-collar workers, unemployment spiking 10 to 20%, mass elimination of jobs? Or isn't your vision that productivity, like whether it be the loom, whether it be the canal, whether it be the steam engine, these were all generators of jobs, not retractors of jobs?
It's a generator of jobs. There are surely different views. Let me give you this view.
Okay.
There's a labor shortage between now and the end of the decade that's measured in some 30, 40, 50 million short. If you just translate 50 million people short in labor force and translate that to GDP growth, it's extraordinary. It's approximately about the size of the United States. And so the ability for us to expand what is today a limited and short labor shortage, we around the world should be able to expand our GDP, and that's our future, to be able to, turn these agents, which are essentially workforce robots, information robots, and human robots, physical robots, to expand the world's GDP.
All right, one last question from me. I want to be sure that we have a smooth transition to the next iteration, to Ultra, and then even to Rubin. How are we feeling? Because I know that there was a glitch. I got a little too aggressive in thinking everything would be smooth. I got ahead. I don't want to get ahead of myself this time. We looking good?
Well, first of all, Jim, remember, we made last quarter, we made the quarter before that. So it was not easy. It was not easy. And let me tell you why it wasn't easy. In the case of Grace Blackwell, because of this thinking machine we wanted to create, this reasoning AI factory we wanted to create, we changed the architecture of these AI supercomputers. The architecture is completely different, and it's extraordinarily complex. And so anyways, now the entire supply chain, not only that, we enabled a very, very large supply chain to be able to build these things. Every ODM, every OEM, CSPs, they've now got it up and running.
Okay.
And now here's the really great thing. Ultra is exactly the same architecture, exactly the same chassis, and so we'll just slip it right in and keep running.
All right, we're going to leave it there. I wish you the best of luck. Congratulations on an amazing quarter, and let's see if the president's plan includes opening China back for you. Thank you so much, Jensen Huang.
Thank you, Jim.
Absolutely. President, founder, CEO.
Off to the races.
All right, Nvidia. Thank you so much for coming on the show. Appreciate it.
Thank you, Jim.
Okay.
Good to see you.
Mad Money's back after the break. This week, we're going through some of the hardest hit apparel stocks in the market, searching for potential opportunities. Not all of them work right here. I mean, last night I told you, a little tough right now to get involved with VF Corp, although I am indeed hopeful. But what about Lululemon Athletica, the athleisure kingpin? For years, this is one of the best performing stocks in the market, but it peaked at the end of 2023. Spent most of last year getting clobbered. Just when the stock started to find its footing again, we got hit with those Liberation Day tariffs, and Lulu went right back down. Like everything else, it's been able to bounce off those lows, but the stock's still down more than 25% from its late January highs. What do we do with this one? Lulu reports next week, which means we got to do a little guesswork. But let's start with the last quarter, delivered in late March, the one that caused the stock to plunge 14% the next day. But I actually thought the results were okay. Lulu delivered better than expected sales, even if the same-store sales came in soft. And they posted a 29-cent earnings beat off a $5.85 basis. The thing is, we already knew the results would be good because the management had raised this guidance. They pre-announced in mid-January, effectively telling you that the holiday season was good. But that's rearview mirror, isn't it? And that's why Wall Street focused on the guidance. And that came in well below expectations, both for the current quarter and the full year. So the stock sold off hard, then sold off some more after Liberation Day because Lulu has a huge manufacturing presence in Vietnam, which was set to be hit with a 46% tariff. A lot of people feel that China sends things from Vietnam to here. Once those reciprocal tariffs got delayed, Lulu was able to mount a comeback. But can this rebound continue? I'm cautiously optimistic. I'm going to tell you why. First, I'm still hopeful that the tariffs in Vietnam won't end up being anywhere near that 46% level that was announced on Liberation Day. This is a place where many companies move their manufacturing to get out of China, doing exactly what they thought the Trump administration would want. Plus, we kept hearing that trade talks with Vietnam are progressing well. Their government just fast-tracked a new Trump golf course. I mean, that can't hurt. Second, I also believe that the consumer is doing better than most of Wall Street seems to assume, and keeping with that much stronger than expected consumer sentiment number we just got yesterday. Even when consumer sentiment looked terrible, actual consumer spending never really took a hit, though. Now, with Lululemon stock trading primarily based on macro headlines about tariffs and the consumer, it's easy to forget that this company's not totally hostage to the big picture. The company has a strategic plan in place, which is focused on product innovation, the guest experience, and the market expansion. They're very rigorous about this. They've been doing this for a couple of years. It's been paying off. Well, then what about the disappointing guidance the last time these guys reported? Look, I think there's actually a strong chance that management was simply being conservative at a tricky moment. I like this. Consider, when Lululemon reported in early December, they projected they'd earn $5.56 to $5.64 per share in the next quarter. But in the end, they actually earned $6.14. And this isn't some one-off example. Lululemon's got a long track record of beating the numbers, in part because they tend to sandbag you with lowball guidance. Maybe Wall Street doesn't think they can outperform their guide again this year, given everything that's going on. But don't be surprised if they pull it off. And that brings me to my final point, which is that unlike the setup for the previous quarter, where expectations were sky high after Lulu had raised its outlook just a couple of weeks before the quarter ended, expectations feel very low right now. Ooh, I like this setup. Even though the stock's been bouncing back for most of April and May, when you look at the analyst coverage heading into the earnings, all of it seems to be analysts slashing their price targets. The latest example came just this morning when Morgan Stanley cut their price target on Lulu from 373 to 346. But you know what? That report is actually more positive than the price target cut would make you believe. The analysts said they expect an upside surprise for earnings per share and also for sales in the Americas. They're even betting on higher than expected same-store sales for the region. And perhaps more important, the analyst at Morgan Stanley says that if that happens, and even if Lululemon really reiterates its full-year outlook with such a beat, that could send the stock higher. I think it could send the stock soaring. I like the setup for Lululemon heading into next week's earnings report. I think it should be bought, given that expectations for the company are now lower than at any point dating back to mid-2024, which was a great time, by the way, to buy Lulu. This is reflected in the company's forward price-to-earnings ratio, which currently stands at just 21 times earnings. That's nearly a 50% discount to the stock's average valuation over the past 5 years. Good timing. So the bottom line. Lululemon is a beaten-down retailer that I think can continue making a comeback. We'll see what happens next week, but for the time being, I am inclined to take a chance here. Maybe do it with call options deep in the money. Why not? The expectations for Lululemon are so low that the risk-reward seems pretty skewed to the upside. Yeah, money's back in for the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
My interviews with Salesforce and Nvidia may be over, but the work's just getting started. The Investing Club team is diving deep into the numbers, breaking down the earnings, mapping out a game plan on how to invest in these two companies. You know we are in and like them, and we're not done yet. Tomorrow brings another big club named Costco. Now is the perfect time to join the club with my special offer. I want you to head to cnbc.com/Cramer Club or scan the QR code on your screen. And now it is time for the lightning round. That's right. We're wrapped up. Calls saying the stock data. Buy, sell, just put another course. Stock questions. That might stand for the great goodbye. Okay, then sound. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round. Give it to Smeeze. It's Sunny from Massachusetts. Sunny.
Hey, Jim, I'm a club member, and my kids think you're the funniest guy on TV. They want to know when you, Jeff, and Ben are going to write a dad joke book.
You know what? We may have to do something. I'm looking at Chef Ben right now, thinking that he's all set for a couple of jokes. But Chef Jeff is working on a couple of things for the club. How can I help you?
Tell me your thoughts on LDOS.
LDOS? Leidos? I like it. Look, I am worried that the defense budget may be cut, but this is Homeland Security. I think it's a good opportunity. The stocks come down a great deal. Let's pull the trigger. Okay, I want to go to Mark in Texas. Mark.
Booyah, Jim. How you doing from South Texas?
Oh, man, I love South Texas. Let's hit me. Come on.
I've got IBKR. Should I start a
the
position?
brokerage firm that is very, very smart and very well run. And I do like brokers, particularly those that are able to let us do what we want. And that's one of them. I say buy. Let's go to Bart in Washington. Bart.
Hey, Jim, just wanted to get your insight on SMR.
But why don't we just buy GE Vernova? I mean, it's been a winner for the club. I think it can go higher. I really like it. Look, they're both parabolic. NewScale has been straight up, and so GE Vernova. But GE Vernova's got a book of business. That's what I like. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab.
Jim Cramer, the diehard of the dollar.
Hey, Jimmy, love the show.
My 5-year-old grandson loves to watch your show.
I have to thank you for making us money when it's there to be made.
Our world is a better place with you in it.
If you can't beat them, then at least stop judging them. That's what I thought when I read this morning that Toyota had put $250 million into Joby Aviation, the profitless electric helicopter company. Joby wants this money to help develop its battery-powered vehicle that can take people short distances, kind of a car helicopter, sort of a taxi car helicopter. Even though this Toyota money was well known, they've been investing hundreds of millions of dollars into Joby for years. It didn't matter. Joby's stock still roared over 28% today. Nobody cared that the news was old. It might as well be fresh as a daisy to these buyers. And that's at the crux of why you can't sniff at Joby or its competitor Archer with a similar business that's backed by BlackRock and Stellantis, among others, which again have put hundreds of millions of dollars into this technology. I'm confident that if we read a headline that Archer just got more money from one of these partners, that stock would have a similar reaction. Buy, buy, buy! So how can you be critical of anyone who's buying these flying car stocks with the possibility that they'll keep flying every time their deep-pocketed partners dole out more money, even if the money was expected? And look, it's not just flying cars. When you hear anything about quantum computing, any capital infusion into them because they're all burning money like there's no tomorrow, these names get a huge lift. Again, though, why not? Who's to say that quantum computing won't be the next technology? The naysayers tell us it'll take decades before any of this is useful, but the naysayers are not in control anymore. Same deal with nuclear. Even though there's really only one company that's ready to profit from new nuclear reactors, and that's GE Vernova, any company that's working in the field, in any sort of adjacent field, will rally on even the thinnest good news. There are other speculative areas that excite people, even if the companies in question are burning money, because so many of them are money losers. Most of the excitement comes from capital infusions. The worse they do, it seems the better the stocks go. I've steadfastly tried to warn people about the dangers of these super speculative stocks, including many that I am constantly being asked about. I mean, constantly. My caution has been a sane stance at times, but because of the persistent adulation for these industries, I fear I've become too much of a scold, a curmudgeon even, in light of how easy it is to move these stocks higher. It is not my job to keep people out of stocks that can go higher at the drop of a hat. After this Joby jump, I'm not going to lower my standards, but I am going to have to change them. If I think something can go up on what looks like old news, I have to relent and recognize that these stocks represent some sort of new class of equities, ones where no one minds if they never make money. So my role going forward will be to recognize which stocks can go higher on good news and accept that that's the market's judgment, even if it's not mine. Just please, when you get a big gain in these speculative names, promise me this. You'll take a little something off the table. I like to say, as always, a bull market summer. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer, and I will see you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.